Morning, folks. And see if I can determine the length of time for the delay. Do an audio check for myself here. Hold on one second. All right, I hear the old man. All right, so good morning. Hope you're doing well. Happy Wednesday. We have FOMC minutes later in the afternoon. That's kind of like usually a dud. It doesn't really provide all that much movement, whatnot. We're just going to focus on the micro NASDAQ this morning and the key levels I'm watching this morning. We had our imbalance or volume imbalance there. Regular trading hours, opening range gap low is going to be this price here. Huge premium gap, absolutely enormous. This suspension block I have annotated. Its consequent encroachment agrees with these relative equal highs. I told you I was going to look at just this one simply because of the climate, the market tone. It managed to get through that, use that as well. So what I'm watching is the low of this suspension block as a draw intraday, and any measure of gap filling. I'm just going to be looking just for this morning, going into the lunchtime. All right, about 90 seconds. Make sure I got my little annotation ready here, and I don't see it. Where'd it go? Let me get it ready. All right, 9:30. I'll just take this and toggle it over there. It's not necessary to know the exact consequent encroachment. Like I said, I'm only looking for an attempt to get down into the lower quadrant of that daily. We have sell side over here. So yeah, that pool of liquidity right there, that's of interest to me. Please do not take anything this morning as a trade advice, okay? We have this one here. That'll be enough to watch this morning. Okay, buy side there if they want to sweep that first. Again, this dotted line is the consequent encroachment of that daily suspension block. Minor sell side here. If it were to go below that, I'd like to see it accelerate down to take out these two sell side liquidity pools. Anything below here, I'd like to see expansion, clear out this sell side. And again, the only target I have of any interest this morning is that low of that shaded box right there. I'm going to look at MES and MYM at these highs here. So I'm just going to toggle real quick to that. Kind of stunted on its upside there. MYM, always doing whatever it wants to do. Hooker. IM's a loose woman. All right, so there's two sell side liquidity pools hit. They left this buy side in here. So at this low or this low, it could get a little animated to the upside simply because there's a lot of manipulation going on right now. I don't know if you heard or not, but there's some good news out there. They opened the Strait of Hormuz and there was a ceasefire, but you wouldn't you wouldn't notice it really. You wouldn't notice it. Forgot to put my phone on Do Not Disturb. You guys, man, you guys. Okay. So yeah, as I was saying, they're still shooting missiles back at each other. And there's really no ceasefire going on. So, but the stock market's up. The markets are up on the hearsay that there's a ceasefire. Fog of war. Where's this real strong source of information right now? Because it's not going to come from the news. And our government, they would never lie to us, right? They're so honest with us and so forthcoming with their information. So, and it's interesting how there's a blackout over there. You can't really see much. Very little footage is being shown to you. So you're kind of like being funneled into a corner and saying, I got to take whatever information they give us. And I'm not buying it. So we've traversed 1,200 handles over the last day or so in NQ. That's a pretty sizable run. Watching to see if we keep this portion here, if that upper portion right there to that candlestick's high, if that stays open and we drop lower, that would bode well for it to try to make an attempt down to get in that shaded area. But just be careful. You shouldn't be taking any trades on this stuff. We're just watching it. Already had a nice 50 plus handles of run for sell side. Any movement to the upside is going to have to overcome the consequent encroachment of this wick. So I'll show you what that is here. expect a whole lot more excitement, or let me say it this way. Uh, I would expect a lot more movement with such a large premium gap opening, because where we settled at yesterday in regular trading hours is down here. And there's my copied it, and then I wanted to be able to paste it when the opening bell came at 9:30. When I pasted it, it dropped it right down here where I first created it. So regular trading hours, opening range gap low, huge gap from here at 9:30. So that's a lot of range there. And whenever it does that, it's just it's to me, I would expect them to try to make an attempt at least to get to a more significant pool of liquidity on the downside, sell side, in other words. It's the third target taken to the downside. You never want to see it just like fishing below the old lows. You want to see it to try to like accelerate with range expansion with a very large gap like this. You want to see a little bit more commitment to the downside. Any shorts would have been trailed just above this high now. So there's a minor buy side liquidity pool right there, and remaining sell side exists right below these lows over here. So we have relative equal lows there. We've cleared out three of the targets we outlined for the draw this morning. In and of itself, that's good. And again, just because of the economic climate, the geopolitical mess, the only objective I would personally have for the morning session would be to see it get down to this shaded area down here. If it chooses to go lower, then so be it. It would, if it would be a day where I would be participating, I would just probably keep one contract running, and the majority of the position would be closed. Again, rookie sensation ICT pulls off another stunner. Dude, you didn't take a trade. I know, but you're staring there looking at a chart trying to figure out what it should do. That's the difference. So right away, I would like to see it accelerate and get to the bottom of that daily suspension block. Hypothetically, you should have half of your position off if you're short. These are hypothetical tape reading. In other words, you're carrying an internal dialogue while watching price. Perfect world, bearishness should remain intact as long as we're below the midpoint or consequent encouragement of this wick. So as long as we're below this, I would still be aiming for that. Run into this and above would collapse my position. I would not let the stop loss at that high be challenged. This would be a really nice partial if you could pull one off here, because we're approaching the low that was aimed for over here. That was our lowest sell side that we aimed for there. It could get down here. Okay, it could get there, but if it's going to go there, I would like to see it get to that low end. But because of where this sell side liquidity pool is here, and let's show it to you like that. That low down to the low of that daily suspension block right there, it was approaching event horizon. And when we're in a setting where it could pull back and retrace, we're okay. Consequent encroachment on that wick hasn't even been traded to. I would want to trade through that and then get through this and accelerate onto the lower end of that daily suspension block. There's several targets outlined, delivered to it, right direction, incorrect. And we didn't have to look at any of the garbage that people look for, pseudo order flow. Let's look at how many people bought and sold inside of a candlestick, because that's the real thing. This is all we're looking for: open, high, low, and close, and liquidity. See, simple stuff, folks. Simple stuff. Not even using first percent to fair value gap, just reading the tape. 99% of everybody else out there can't even do this. And they figure out later on that their stuff they're placing their religious beliefs in isn't all that effective. Again, all I'm illustrating is if you can't do this, determine where it's going to go, where it's going to draw to, and stick with an idea, a narrative, how could you possibly expect to be profitable, whether it be a demo or a prop firm or a live account? I mean, think about it. All right, so Event Horizon was tagged. Look at the bodies. See how they stayed away from that level? So this could become an issue where if it trades back to consequent encroachment here, the stop loss that would be sitting up here, if I were in a position, I would protect that and I would just move to the sidelines and be content with the target here, here, and here. And the unrealized objective, which would have been my personal best case terminus for the morning session, and being content with enough, this right here would be just unrealized. So that's the kind of like the internal dialogue I'm holding, looking at price. And that's all you're doing while you're tape reading. You're learning how to get comfortable watching a narrative unfold. Now, the narrative that you're outlining in your mind may or may not be active or correct. But in the beginning, you're trying to discover what triggers you feel. Do you feel nervous? Do you feel elated when things are working in your favor? And when you do feel concerned about being wrong or overconfident, where does your mind go? And you need to journal those things. And what do I mean by that? You start thinking about how if you would have had X amount of contracts on, this is how much you could have made. Or if you were seeing it go against what you expected to see it do you find yourself thinking, this is harder than I want it to be? I wonder if I'm going to be failing forever at this. Trigger moments like that is going to help you figure out where your toxic thinking is. And that's the person inside you that's going to derail you. And you have to recognize what that is and how that person inside you thinks. That's the part you're hiding. You pretend it doesn't exist in the mirror, but it's staring at you every single morning when you get up and you look in the mirror. That's the person you're seeing, but you hide it from everybody else. And in trading, you have to find out what makes them tick, because if you can control them and wrestle them into submission, you have a better chance of being successful. Okay, so that right there would be enough for me to say, okay, I'm going to protect the stop. I'll move to the sidelines and be done. It would only been a very small portion, probably one or two contracts on a micro basis, and the position here closing, below here closing, below here closing, that would be sufficient and enough. in this sell side here. So there was one, two, three, four targets hit, pull back to an area over here where this changes the degree of importance and participation. Going above this consequent correction, this wick is not conducive for continuation. Only for this climate. Okay, if we would have had a normal, not so extreme opening range gap, or we don't have so much emphasis placed on the degree of volatility that's being imposed on us because of the, the manipulation and the stirring of the pot, and it's going to be a destruction. It's Armageddon. We watch and see. We're going to destroy a nation, and then, well, we're really not going to do it. And surprise, world peace, but bombs are still flying. So it's a lot of chaos, a lot of things to work through as an analyst. So it's better to be erring on the side of caution and protect your capital. Don't try to say, well, I'm going to hold on to it. I'm not going to be scared like ICT is talking about. He's scared. He's scared. He's teaching you to be fearful. No, I'm teaching you how to make sure you stay in the game, stay solvent. Okay. I'm not a 20-year-old trying to sell mentorships. See how much give back took place just by getting to this consequent correction of that wick? That it's, to me, it's not healthy. If if it were to continue going lower, going below that suspension block, it could trade down below it, come back up. If it does come back up, say it goes below this area here, it would need to stay in the lower quadrant, not go back to consequent encouragement. Let me show you on the daily chart. Here's midpoint, consequent encouragement, the lower quarter, okay? That proportion of it there, and not get back to the half. So if it trades down below it here intraday, I would not want to see it trade back to that halfway point. Any little retracement back in, if it breaks below this low, that shaded gray box, any retracement needs to be kept at a maximum of just the lower quadrant. So we can do this. Okay, and I'll take that out because the box itself gives you its level. So now going back into a 1-minute chart. So now see how we have that level there? It traded down into the lower quadrant, which is essentially um, the I'm sorry, this is the lower quadrant. I got this disoriented. This is the event horizon level. If we trade below the gray box, any retracement back in needs to be at this level here, 25,155 3/4 or less. Anything climbing back above after we leave this sets the stage for a run for intraday high. Okay, and that would be the buy side over there. But everything remaining true to what I just outlined here, a movement below here, the gray box low, any retracements back in, if it's going to continuously go lower, it needs to stay below the lower quadrant level. And we'll take this level off because we've already used it. And we're going to take this level off because it's already been used. So now this is that little quadrant, lower level of that daily suspension block. You can see that's where we traded back to here. And the bodies, look where they're at. They're not even touching it. So that bodes well for another run below that low here and see if we can get down to that. But it would be one of those things that I would have had to re-enter and give, honestly, in a given situation like today, I most likely would have not entered again. Very, very casual. You're not trying to demand, that you know everything because in the beginning you don't. Let's see if we can sharply move outside that gray box. Reading tape primary function for you as a developing student is simply getting accustomed to determining the draw. That's the first rule of engagement that I teach you all is to know where it's likely to go to. If you don't know where it's aiming for, if you don't know where it's going towards, and have an idea on what to study directionally, you have no chance of doing well. So that's the first exercise and drill I tell you to do is simply sit down and watch live price action. And if you can't watch it, you can get like I'm streaming to YouTube through OBS. Now I don't know if OBS is the best one to use, but I know it was free and you can use this to record your screen. So you can have your screen recording while you're at work or at university or if you're sleeping. Um, and then when you come back to your house, you can go back and watch the recorded stream of the actual individual 1 minute candlesticks. Now, you won't have the added benefit of being able to annotate the levels live and watch them as they hit them, but you know you're going to have to work out that issue. Okay, whatever you can do to watch live price action, book each candle. That's what you need to be doing. You need to be able to watch the open, high, low, and close form real time. If we were watching like market replay, and this kind of it irritates me as an educator, and I'll admit some of my students do this too. As soon as they start illustrating something and they use market replay, that's like ugh, it's like broken glass under my skin. Okay, it irritates me because you already know you have a YouTube channel. Everybody else knows you have a YouTube channel. So if you're going to teach something, at least record the price action, even if you're not going to participate in it. Record it, and then you can annotate it and talk about it as it's doing it. Because you're not really giving your audience um, a clear depiction of what each individual candlestick's doing. You're only seeing how it opens with a little bit of a flurry price action, and then in the last little bit of movement. So it's only two updates to every new candle that market replay shows, unless they've changed it. I've only seen it a few times, but by pulling it up and complaining about how it's not as useful. But watching a recorded version, it allows you, even if you're tape reading live, you should record your screen because what will happen is you have the ability to go back in time and revisit that and pick up on things you didn't see when you were watching it because you're so worried about it getting to your little sell side target or your buy side target, or if it's going to respect a specific PD array. So all of those things will help you build experience the fastest way you can do it. There is no faster shortcut than simply placing yourself in front of price action without any monetary concern about the outcome of what your idea or concern about the market is. That's the best way of learning. And I don't care what anybody says. That's the best way. Once you get a skill set of knowing where the market's likely to draw to, and you're consistent about where it goes to, how often it has worked in your favor, and you've built the confidence knowing that what you're looking for tends to repeat more than not. When that happens, and you have a 2 month, I mean, well, let's say it this way, 6 to 8 weeks, and you're consistent enough to the degree where the majority of the time, what you expect to see happen where it likely draws to, that is the green light that you can start paper trading and spend a minimum 6 to 8 weeks doing that. And I know a lot of you are like, "Ain't no way I'm going to do that, ICT. I can't do that. I got to make my bread. I got to get busy making money." Well, you're going to get busy blowing your accounts. Okay, that's what you're going to do. And so many people like to think they're the exception to the rule, and you're not going to be the exception to the rule. You're going to do it in stunning fashion, failing. Okay, you're ignoring good advice. You're ignoring someone that's proven to you in live streams that this is the right way of doing it. I don't know what anybody else is talking about on their live streams. I don't know what they're looking for. I don't know what they're using. I could care less. But what I'm showing you here, this is as simple as it can be. This is very simple. It's not complex, it's not complicated, it's not convoluted. We're looking for where are we at the open? What are levels that could be realistically traded to? And they're not the best case scenarios. And then you can frame a context around them to look for setups after the fact because the idea and the concept is you don't know what you're doing yet. So where do you start? How do you practice? How do you get good at it? You have to submit yourself to watching these individual candlesticks and how they behave. How do they form? What rules did I teach you are they adhering to? And over time, experiencing that by repetition, going in without an ego, without pride, without fear, anxiety, no need to tell what everybody else does on the internet. Like, yeah, I called this, blah, 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 blah. What's the benefit of that? Like that, like that's a scorecard. That's the wrong way to do this. The only scorecard that matters is your study journal. That's your KPIs. It's your key performance indicators. That's where you keep record of that. You don't do that on social media. Anybody barking about, here's what I called, here's what I did, I guarantee you that's someone that's masking a terrible drawdown or unprofitability. There's your low of the suspension block that we outlined this morning. Okay. Now take a deep breath and realize that that's all that's necessary. That's all that's necessary. I don't expect you to be an Olympic trader, gold medalist. And if I'm teaching you and I'm the coach here, if I'm not expecting that of you, why are you expecting that of you? You're expecting to be able to do all these different entry mechanisms, high, low, buy, sell, short, all day long. It's not realistic. That's not realistic. In the beginning, you have to operate in a realm of realism that comforts you. It doesn't make you anxious. It doesn't cause fear. It doesn't drive you to do more because more is not necessary. Slow is smooth, and smooth is fast. Doing it a different way, racing around or trying to skip over things, it's not it. That's not it. Biggest lesson I could have given myself if someone would known what I'm teaching you, if they would have instilled that idea in me when I was 20, I could have saved myself fortunes and health deteriorations and anxiety and scar tissue and regret, just demoralization. It was hard. And what I'm telling you to do, you're watching me do it live in front of you. There's no buying and selling. You're simply custom to watching what price is doing based on a directional draw. If you cannot do this at the minimum, why are you entering trades? You're doing FAFO. That's what you're doing. And even if it's a demo account, even if it's paper trading, you're recording subconsciously negative stimuli. And every single time you do it without any rhyme or reason while you're pressing the button, your subconscious is remembering that this didn't pan out. This is something that I need to be fearful of if I try to do it with real money. Whereas I'm showing you here, there's literally nothing to fear. It's all upside in experience, all of it. There's nothing detrimental. There's no one that's going to judge you. No one's going to mock you and troll you because you're not sharing your expectations with anybody on the social media. You're in your fortress of solitude. It's just very proper learning. You have to guard your mind in the beginning. There's so many broke people out there that are absolutely disgusting and miserable, and they would do nothing more than to put toxicity in your mind, make you doubt. Again, there's a lot of people out there with very strong opinions about me. You're watching me do these things live. I'm telling you what it's going to do beforehand. How many times did I get it wrong? What's the market doing? What is it following? The Pied Piper. Okay. And daddy knows how to play a saxophone real good around here. And price seems to follow it perfectly, doesn't it? Even in difficult market environments. So while you're learning in these difficult market environments, you're actually being trained like the elite special forces because you're able to see this stuff when the market's extremely difficult. When it gets better and less difficult, it's going to feel like a cakewalk. It's going to feel easy. And it's going to sound like when you talk to other people, yeah, this is what I did today, and I didn't feel any fear or whatever. If they ask you, did you have any fear about that, or how did you trust it? You're going to feel a level of confidence that if you're not careful, you will bloom into being arrogant and narcissistic. And then on the other side of the spectrum, you have to guard away from that. And I went from the low end of the spectrum being fearful, not knowing how to get into a trade, no mechanism to get into a trade, to now 81 ways to get in there. And then when I started making lots of money, I had to pull myself out of that narcissistic, egotistical maniac. And it's a very hard thing to balance that because when you're losing, it's very painful and you're very fragile. When you're making lots of money, you feel invincible and you dare people to hit me with a bus, bro. So as a trader, you have to constantly balance that. And you should be aiming for Dr. Jekyll at all times and avoid Mr. Hyde. ICT is Mr. Hyde. Dr. Jekyll is Michael. So the calm, mild mannered Michael, who you're hearing from today, that's what you're trying to encapsulate as the forefront figure, as the analyst in you, and stay there. Don't allow social media to inspire you to be more. You don't need to do all those things that you think you want to do right now because none of those things you want to do on social media are making you any more money. They're not going to make you any more money. Okay. If you focus on the things I'm showing you, what to focus on, notice I didn't bring a whole lot of things in this morning because in the beginning, you don't know what to bring in. So what did we do? We focused on the fact that we had a large premium gap opening. I took you to the daily chart because that's where your key levels are going to be based on. Hold up the suspension block. Told you it was going to draw down to the low. That's my target for this morning. I personally don't care where it goes now. You have to know when to pull the plug. Going in, just because we get it right and it goes to where we think it's going to go, it's not an invitation. Let me get that again. Let me do it again. It's not like a piece of candy in a bowl where you're like, oh, let me walk by and grab that one piece of candy. It's not going to hurt. It's only a little bit of calories and sugar. Sugar isn't going to spike that high. But then you're like, that was really good. Let me grab another one. And then it's time to leave. Let me grab a handful of these for the road. That's what happens. That's what happens when you're undisciplined. So you have to know when to stop. So, like I told you this morning, go back and listen to the stream. This low, that gray box, is all Michael was looking for this morning. That's enough. That's enough. If you don't think 150 handles or so is enough, I can't help you because I promise you that's thousands of times better than majority of everyone else out there doing day trading consistently. We're not out here in live stream fumbling around. Okay. We're not out here complaining about why the chop is beating me up, why it's indecisive, why you doing this to me, NASDAQ, why you hurting my feelings in front of everybody, NASDAQ. You don't hear me talk like that. I know what I'm looking for. I know how it's going to get there. And I'm trying to teach that and transfer that intellect to you. It's your job to use this information in your own hands diligently. And there's your little another pierce below that daily suspension block. I think that's going to be it for this morning. I've done enough here to at least inspire you to do this similar thing in your own time. Okay. If if you submit to this and you do this practice for 2 months, minimum 6 weeks. Okay. You have to at least give it 6 weeks. That means no demo trading. Logging what you expect to see, and then after you're done, like say right now we would be done, okay, and you would screenshot your chart and then go through the motions of saying, okay, where what did price run from? What did it use? Because you're not seeing it live because you don't have the experience being able to determine it at the time. The only thing that you can see clearly, hopefully, is an old low or a range that's an inefficiency. And that's all we use today. That is not complex. That is not complicated. I don't care what you trade. There is nothing easier than what I just showed here today. There's nothing easier than that. You don't have to think a lot about it either. So you want to have very few things to concern yourself with, very few moving parts, because the less you have to worry about and concern yourself about when you have little to no experience, the better it is for you to gain an understanding and a baseline experience. And then slowly, over time, by you watching price action live, you will grow in your understanding and you will see things that you can't see right now. You won't be able to perceive all the things I'm teaching or your actual model until months from now. And that's normal. It's not scary because it didn't happen for you the first day you sat down and started tape reading. It's a normal process. It takes time. And you have to invest that time in yourself because nobody else is going to do it for you. I can't do it for you. So, a little bit more dive below that. Just again, by grading those inefficiencies on the daily chart, real order flow. Okay. I left ICT for this because this gives me a better read. I love it. How much better is this? You put a gradient level on an inefficiency. Okay. If the market's going to drop, it can tag it. But if the bodies can't even touch that blue line, which is the lower quadrant of that suspension block, is that indicating algorithmically that it's bullish or bearish? No, it's not bullish, it's bearish. So it rolls lower. I told you it was likely to go down, take that low, and get to the bottom of that. And it has done it. Look how much time it's spending just doing this little dance around the low of that gray box. Think about that. It's giving you multiple times to say, okay, ICT said this is the target here. You should be gone. You should be out and be content with enough. Even if this thing falls out and fills the entire opening range gap, who cares? Who cares? Imagine if you would have done this in your own hands today. The things that I pointed out, if you would have done that today, this is your interim report. Okay, remember that in school between halfway point of you getting a report card, you get an interim report. So it was like a pseudo report card. It was enough to get you punished if you weren't doing good. You know what it was like in school. So your interim report would be if this is what you would have done today. If you would have looked for these levels, if you would have looked for this type of price action and drawing to this and watched each target do this and observed how it didn't touch the bodies on that line. So that's real institutional order flow. That's bearish, where everybody else would have maybe looked for this to continue going higher. The fact that it was unable to get there with the bodies is indicative of bearishness. That's an algorithmic principle and signature in price action. You don't need to have level 2 data. You don't have to look at order flow. You don't have to look at footprint. You don't have to have volume profile. You don't have to look at Elliott wave. You don't have to look at anything else. Nothing else. Everything is right here for you. And anyone that wants to argue that this is complex is a fool. It's just you're a team player for something else, or you have something that you want to sell. That's all it is. You can't argue that this is simple because it is. It's very simple. And that's in the beginning what you're aiming for. You want something simple that's replicating, that you can see it pan out consistently. That doesn't mean every day you're right. It just means that most of the time, you're doing it correctly. And then over time, what happens is you don't fear missing a move. You don't fear doing it wrong. You don't fear when it doesn't work in your favor because, wow, I've been doing it for 6 to 8 weeks, and I probably had about 7 days where it didn't pan out in my favor. Would you consider that failure? Remember, you're just now getting a baseline starting point. Would you consider that failure? The parent in you that's raising this traitor inside of you, would the parent scold the inner child traitor in development like that? No. But isn't it funny? That's exactly what we do. We punish ourselves because we didn't do it good enough. According to who? The unrealistic expectation that you place on yourself because you're watching other people do something that they may have failed 50 times before that one episode that they now show to you. Think about it, folks. That's the stuff they tell you about me. I only show you the winners. What am I doing in front of you every day now? Am I doing it wrong? Hello. No 12 laptops required. No cherry picking. Never editing a text. Never editing a post. Never deleting anything. That's what you look for in a mentor. That's what you're looking for accountability. You want someone that's going to learn, teach you and learn from. You have to have that first. They got to be honest. And I can be the ICT character for all the entertainment and be funny and make little quirky jokes and take shots and back and forth, rib each other. But I'm the best. And there's no denying it. Okay. I'm out here proving it to you calmly for free. And I'm encouraging you to listen to me. That's all. Just listen to me and test it in your own hands. I promise you, you can do this. And it is not as hard as you think it is. You've built this thing up in your head that it has to be this easy by this time, or I'm just going to do something else, or I'm not going to do it at all. What you just did, if you're thinking that way, and I'm going to close the stream, if you think that way, what you've only accomplished is you have put a scheduled deadline on you quitting and failing. You don't see it that way. You see it as I'm putting a deadline on I have to be successful by this date, by this much effort, by this time, this many times you trying to do it. If it doesn't work by this, then I'm going to do something else. You just scheduled the exact premise why you're going to quit and then fail. There cannot be plan B. Okay? There's no plan B. There's no, well, let me make excuses for, no, there's no excuses. Failure's not an option. And if you don't have that mindset, don't bother with my stuff. Don't bother with anybody's stuff, because I promise you, the only thing you're doing is setting yourself up to fail, and you're doing it to yourself. It's that simple. How you think, how you think is exactly how you're going to engage in everything in life. And if you set yourself up for this is where I pull the plug, I'm done. The only thing you've done now is ensured the exit strategy that you're going to do. And you've left no room for optimism. You've left no room for upside potential. The only thing that's concrete in front of you in the future is how you're going to stop. And stopping and quitting, that's the definition of failure. So hopefully you learned something this morning. Hope you got something from it. If not, at very minimum, I hope that encouraged you. Be safe, and I'll talk to you when I talk to you next time.